Despite the Florida hurricanes and in the face of recently rising mortgage rates, unsold inventory of homes on the market climbed this week by about 1%. We've been expecting inventory to climb and expect it to tick up again next week before seasonal inventory declines start in November. The seasonal changes in the housing market are very different from what they used to be, with inventory peaking 2 or 3 months later in the year. If you've been paying attention, you know that the housing supply isn't just the unsold inventory. It's also a factor of the new listings volume each week. Supply is how many homeowners want to sell, not just how many homes are available to buy. The signal that we watch for in the new listings count is whether there are too many sellers, people like rushing for the exits. All the bearish scenarios for home prices require more sellers each week. And so far in the post-pandemic years, we haven't had a lot of sellers. Homeowners are staying put. Last week, we discussed the phenomenon we call the Great Stay. So that's true nationally. But here's what we wanted to learn this week. Are there any local markets where sellers are rushing to the exits? We know that inventory, for example, is up in Phoenix and Dallas, but can we measure investor panic selling or home builders dumping inventory to get out? Are there any canaries in the coal mine out there? So in this week's video, we're going to take a slightly different path than our normal stats and look at the new listings in the local markets. We've picked out the 100 biggest metros in the country. So stay tuned for what we learned. At Altos Research, every week, of course, we track every home for sale in the country, all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand the changes in the U.S. housing market immediately as they happen. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the data here in the middle of October 2024. So let's start with inventory. Available inventory of unsold homes on the market expanded across the country this week by about 1%, or 7,000 single-family homes. So that's a healthy increase. It's more than recent weeks, but it's a smaller increase than what was happening last year at this time. Last year, inventory rose by 1.5% in the same mid-October week. Now the pace is 1% gains. So there are 33% more homes on the market than a year ago, but because inventory was rising so quickly in the fourth quarter last year, that gap is down from 40% increases in September. So that's why we've been tracking this change each week. Like last year in the fourth quarter, buyers were running for the exits, and it's a very different market now. And it's not a great market, of course. Every time mortgage rates rise, home buyers have shown they're perfectly willing to wait for conditions to return to their favor. Interestingly, inventory is now only 21% fewer than what we had in 2019. We use 2019 as a bit of an arbitrary baseline, but because that was the last pre-pandemic year. In the fourth quarter of 2019, inventory was falling quickly. Mortgage rates had peaked and home buying conditions were improving. So in this chart, in the top group, the 2019 line dropped quickly in the fourth quarter. So these days, the seasonal variations are less, and they are later in the year. So I think we'll see 2 more weeks of inventory growth unless mortgage rates don't cooperate. If rates go up, buyers will back off, and inventory will climb into November like it did in 22 and 23. So that's the inventory. As I mentioned, we want to focus this week on the new listings volume. So there were just over 60,000 new listings unsold this week. That's 6% more than a year ago. There were another 10,000 new listings immediate sales. So the overall was that 70,000 sellers this week, which is just 4% more sellers than a year ago. So there are more sellers nationally, but just a little bit more. No signs in the national numbers of homeowners like running for the exits. Last year, there were fewer sellers each week, but demand was also weaker, so the unsold inventory was piling up faster last year. The important thing to watch for with the new listings is when we finally transition from this era of very few sellers to one with more historically normal levels of sellers. So there are 60 or 70,000 new listings each week now. When in the pre-pandemic era, like that would have been 80,000 sellers per week. What we know as of now is there is no transition to more sellers happening at the national level. There's no evidence of seller supply increasing significantly. There are just a few percent more sellers each week than a year ago. The trend has been slow, incremental growth all year. There's no sign of that trend changing. So you can see that national trend here. The red line is still bumping along the bottom, showing many fewer sellers than in previous years. But I was curious. Are there any local markets where we can see homeowners or investors or builders running for the exits? Are there canaries in the coal mine? So, for example, Austin has more unsold inventory sitting on the market now than any time in the last decade. Is that inventory surging from sellers flooding the market? In fact, no. It turns out that Austin has 3% fewer new listings each week now than in 2019. It's a big shift in home buyer demand that drove Austin's inventory up over the last 2 years. But because there aren't that many sellers, Austin's inventory does not appear poised to grow much from here. What about like Tampa or Sarasota? So are sellers looking to unload after the hurricane? Well, it turns out no, the opposite is happening. There are fewer sellers than normal, which makes sense given the devastation. But it is worth checking to verify. So maybe next year is the time for a transition with more sellers in Florida, but not yet. So keep watching. So of the 100 biggest metros in the country, the biggest inventory metros in the country, 76% have fewer new listings each week now than they did in 2019. There are only a couple of markets that stand out with more sellers each week now. The standout markets: Spartanburg, South Carolina, McAllen, Texas, and maybe Huntsville, Alabama. Spartanburg has 53% more sellers now each week on average than 2019. McAllen, Texas has 44% more. Huntsville has 29% more. All three of these are investor heavy and builder heavy markets. They're all small towns, but maybe there's a nexus of like investors and builders and slowed migration patterns in 2024 that led to a buildup of sellers in those markets. We built an interactive chart of the 100 big metros so you can search for any market you care about. I've included the snapshot here. I'll include a link in the description below to the HousingWire article where we publish this interactive version of this chart so you can explore. The takeaway on the local new listings data is that most of the country is poised to have an inventory decline if mortgage rates fall and stimulate demand. There are almost none with any signs of seller-led supply. All right, on to the pending sales. There's 60,000 single-family homes which took offers and went into contract this week across the country. That's 9% more than last year. And in fact, 11% more sales contracts started than the same week of October 22. Overall, there are 358,000 single-family homes in contract. That's 10% more than last year. It's 2% more than the same week in October of 22. So this is the first time in 2 years that there are more homes in contract. This total pendings count is the chart I'm showing here. So these are all the homes in contract scheduled to close in the next 30 or 40 days. See the dark line here for this year is staying elevated just long enough to show growth over last year and over 2022. Again, this is not really about growth in home sales. It's just a tiny bit of growth. Rather, because the fourth quarters of 22 and 23 were so weak, the comparison is easy. So we're just very slowly adjusting to this new normal of higher mortgage rates. The current pending sales got a boost from lower rates last month, but those mortgage rates gains are gone. So this progress is just good enough to show some year-over-year gains, and it may be fleeting. So though I expect in the fourth quarter you'll see some headlines that say home sales are up over last year. The traditional data will start to pick up this transition. I've said this a lot recently. These gains could be fleeting. Home buyers are not afraid to walk away when money gets more expensive. Also, a lot of the big Florida markets are at a standstill. and those are big enough to move the national numbers. So while the recent trends are a little positive, the last few weeks have maybe reversed any home sales momentum that might have been started. Home prices are largely unchanged this week. The median price of single-family homes going into contract was $389,000 again this week, $389,000. Prices continue to hold up better than I expected earlier in the year and are about 5% greater than last year at this time. The median price of all the homes in the U.S. right now is $439,900. That's also unchanged from last week and is just 1% more than a year ago. So asking prices are 1% higher than a year ago. Contract prices are about 5% above that same period. And so you can see the range for this year's home price gains, 1% to 5%, depending on how you measure home prices. About 6 weeks ago, as the summer drew to a close with mortgage rates staying higher for longer than anyone expected during the year, we could see prices waning. Inventory was building up, buyers had more selection and less competition. Affordability is obviously strained. So the price paid for homes dipped to $380,000, but then mortgage rates took a big step down and buyers noticed. This pending price metric jumped. So the resurgence of price was a bit of a surprise to me. I expected some demand increase, but I would have assumed the price point would have stayed the same and just a gain in transactions. But in this chart, you can see this year's dip in pricing in August before the resurgence in September. Like the sales volume I mentioned already, the price comparisons versus 22 and 23 are also much easier in the fourth quarter too. I've highlighted on this chart the period in October 22 when mortgage rates spiked to 7.5%, home buyer demand backed way off, and the prices dropped by several percent in that month. It's wild to think, but even with the affordability challenges still very prominent, we're still in better home buying conditions than we've seen in a couple of years. So it's wild how quickly the sentiment can change in a week. We were maybe at a transition point to get some home sales growth, and then suddenly we had a very big jump in mortgage rates. We know that buyers can put the brakes on very quickly. At some point, maybe we'll see sellers in some of these local markets getting antsy. Potential home buyers and sellers need to hear that data from you so they know how to act. If you need to advise people in the real estate market, you should join us at Altos Research. Go to altosresearch.com and book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that to join us. Let's get started.